Hey everybody, Bill Ladd with Duckett Ladd here with my partner Ryan Hatch. And today, guys, we're going to talk a little bit about the tax bill that probably a lot of you guys have heard about. That right now there is some uncertainty. And to be honest, we've kind of delayed putting some information out because it is not certain that it is going to pass. And we certainly want to allow the process to work through, but I think it's fair to say this is probably as far as we've ever gotten to see meaningful tax relief and regarding some big provisions that can help our dental entrepreneurs out there. So, Ryan, why don't you go ahead and just unpack a little bit about the bill, where it's at, and then we'll kind of get into some of the components we think are important to our clients.
Yeah. So right now the bill has passed the House and it's moved on to the Senate. However, it's facing some headwinds in the Senate. There's some potential changes that could be put in by the Senate, and if that was the case, it would have to go back to the House to get passed a second time.
And so, if you look at what happened in the House, which I think is meaningful, it was a bipartisan bill that passed handily, correct? I mean, there was good
Correct.
bipartisan support for this bill. So, somewhat rare in Washington to see that. So, that bodes well, but indications are that the Senate may be a little bit more of a uphill climb, and that any changes they make, like you say, Ryan, is going to have to go back through the House. And that's just going to kind of elongate the process, which is meaningful because some of this stuff is effective for not just 2023, but also for 2022. So the sooner we kind of get a lay of the land, the better there. So what do we have an expectation on when this thing might be brought forth in the Senate?
Yeah, they were saying that the Republicans that are in favor of the bill were hoping that they could get something passed by March 15th. Whether or
Okay.
not it'll come up to a vote by then or not kind of remains to be seen.
Okay. So let's just real quick talk through what we're telling our clients, Ryan, because it is meaningful and there's uncertainty. They seem to always do this to us. They kind of pass bills after the fact, but there's individuals who may be affected and there's businesses. And so what do you think, or what are we telling our clients? And granted, every situation is different. You want to talk to your tax preparer, but what are we telling our clients is our recommendation if they're an individual who's maybe affected by the child tax credit, or if they're a business who has maybe some of the other business components affected?
Yeah, so if you're an individual and only affected by the child tax credit, we are recommending going ahead and filing your 2023 tax returns.
Okay.
The IRS has said that if you have a change based on any potential legislation surrounding the child tax credit, they will fix that on their end and send you any additional refund that you were
Gotcha.
deemed to get. On
Okay.
the business side, we are recommending extending and holding those as we wait to see bonus depreciation rules, R&D rules. Those are all potential effects of this legislation.
Gotcha. That makes sense. So individuals, go ahead and file. If you have a refund coming, get that, and the IRS will true it up, make it right, issue a separate check. Businesses, if you have anything that we're going to talk about here, it makes sense to maybe hold off just a bit and see if we get any clarity. And understand too, guys, that if it's changes to depreciation, you're going to give your taxpayers a little bit of grace too, because we're going to see a trickle down effect where software has to be updated and things are going to take a little bit longer than what we're expected. That's why we want to see some movement and hopefully this thing pass sooner rather than later. Okay, Ryan, let's go ahead and jump in, man. Why don't you hit on, do you want to hit on the key individual and then we'll go into business?
Sure. So the key individual change, like we said, is revolving around that child tax credit. There's a couple things they're doing to it. The first one is they're going to adjust it for inflation, round it to the nearest hundred. That doesn't start until 24 though, so this doesn't affect your 23 tax returns.
Okay.
What could affect 23 tax returns is they are increasing the refundability portion of the credit. So if you are in a lower tax bracket, not all of your child tax credit was able to be used to offset actual taxes, a greater portion of that tax credit is now going to be refundable, and you'll be able to get that if you're in that lower tax bracket. That's really the only change that we're seeing right now that affects
Okay.
most of our individual clients.
Yep, makes sense. A lot of you guys, have businesses, and so we're going to be on a holding pattern anyway. But if you're an associate or out there, talk to your preparer and ask them if it makes sense to maybe file a bit earlier, especially if you have children that might be affected there. Okay, so really what we want to spend most of our time on, Ryan, that's going to affect most of our dental entrepreneurs is the business side. There's some good things I think we can say, generally speaking, from a business perspective. this is a favorable tax bill?
Indeed, yes, particularly around the R&D credit and bonus depreciation.
Yeah, yeah. Well, go
So
ahead,
with
unpack those for us.
yeah, with the R&D credit, if you were familiar with that, or if you've taken advantage of that in the past, you probably remember the kind of debacle back in 2022 when we were hoping this legislation would pass,
Yeah.
and it didn't, and we had to amortize all of your R&D expenses, which created an increase in your tax liability. Well, what this bill does is it not only fixes that for 2023, but it also retroactively goes back and fixes that for 2022. So if this passes in its current form, we'll be able to go back and amend 22 returns to take all those R&D deductions instead of amortizing them, get a refund, and then on your 23 returns, just go ahead and deduct those R&D expenses without having to worry about the amortization for 23 all the way through 25. This bill would fix that.
So that's a big deal. So with dental clients, not all dental clients, qualify for R&D, but if you have lab type expenditures, then typically, you could potentially qualify. And so we had a few clients that did qualify that had a massive tax shock last year because they had to amortize these expenses that they normally could deduct. So that was 2022. Now in 2023, if they fix it, Ryan, correct me if I'm wrong, we don't know 100% the mechanism to fix it. Our gut is that we'll just have to go back and amend that return.
Correct.
But they may have a different way where you can claim it, catch it up in 2023. I think they've actually come out and said, we just don't know the mechanism yet. We haven't provided, there's no mechanism provided to make that right for 2022 since it's already been filed. Is that correct?
Correct.
Yeah. Okay. So that's a big one there. Let's talk about bonus and then kind of a tag on, section 179. Those two are somewhat related.
Yeah. So with bonus depreciation, starting in 23, it was supposed to taper down 20%. So in 22, you could have 100% bonus depreciation. 23 was 80, 24 was 60%, so on. What this bill does is it makes 2023 bonus depreciation all the way through 2025 back up to that 100%. So if you purchased equipment in 23 or you plan on purchasing equipment this year, know that we can take 100% bonus depreciation once if this bill passes. And yeah, to kind of extend on that, section 179, which is another way to deduct equipment purchases, 100%. That amount has been increased a couple $100,000 from the original amount. It's up in the millions. So it doesn't, you have to buy a lot of equipment to get to that point, but just know that is also increasing.
So this is probably the biggest provision in here that's going to affect most people who are listening to this. Anytime you reinvest back in your business, and we believe that's a great tax strategy, is when you're growing, being smart about it, but investing back in your business, when you have the ability to take bonus depreciation to some extent, that's a huge deal. And that really kind of rewards taxpayers for growing their business and trying to generate revenue and, stimulate the economy. So we really like this provision. For those of you who have been doing your tax planning, it probably was based on an 80% rate for 2023. So this may be something that could be a pleasant surprise if it does come back and all of a sudden you have more losses or more expense, I should say, than what you were expecting.
Sure. That extra 20% will definitely help reduce some tax liability. And this is the one thing that we are recommending holding off
for sure
filing until we know what the rules are going to be for 2023, because we'd like to wait until we can pick up that full 100% bonus if we can.
So extend, and hopefully we know within the next couple of weeks potentially what that looks like. And another good thing too, Ryan, is that what you said is that really gives us not just 2023, but 2 more years of certainty that we have 100% that we can plan on.
Correct.
That's a big deal. Okay, perfect. What about any other? I mean, I think we can both agree those are the big ones, right? Any other little ones that might be of note that they want to keep an eye out on?
Yeah, I mean, kind of the main thing would be how are they going to fund this bill? And what they're going to look at doing is being a little bit stricter and going after some employee retention credit enforcement. That's going to kind of be the mechanism that this bill lays out to pay for it, to pay for these tax breaks that they're giving. So just be aware that the ERC, the employee retention credit, is going to be scrutinized a little bit more because of this bill if it gets passed. Yeah,
the thought process is that was a COVID relief fund that probably had a lot of bad actors in there. And there was probably a lot of claims that were tenuous at best and fraudulent at worst. And so to our understanding, it's really going to open up the enforcement activities and kind of extend the periods they can look at it. So, the recommendation there is if you did take ERC money, in particular, if you took it really beyond that true COVID period of what Q2, maybe into Q3 of 2020, because they actually allowed it into 2021. And just look at your fact pattern. If you had someone help you, circle up with them and ask them if there's anything proactive they need to be doing, to justify what you claimed, or, just basically kind of tightening up your case there. Does that make sense?
Yeah, exactly.
Okay, perfect. Other than that, Ryan, I did notice there's like a kind of a strange provision about 1099s in there, that typically are $600, but now they're going to be increased. Is that right? What's that all about?
Yeah. So as you're aware, when you fill out 1099, you're gonna have to fill it out for any vendor you paid or individually paid over $600. They're actually raising that threshold in this bill to 1,000, which would ease the burden of 1099 filing a little bit for those vendors that you paid in between 600 and 1,000. You don't have to file those anymore.
It's kind of a strange provision. I'm not sure what that accomplished besides
Yeah.
making it a little bit easier. So this will be something that will affect your bookkeeper a little bit differently. So probably not a huge thing, but really just an interesting. Outside of that, guys, there's a bunch of stuff that maybe applies to bigger businesses, foreign businesses. I don't know that there's really anything else that we feel like is of major note at this point. And obviously, what we want to reiterate again is that this is not certain. Kind of another reason we held off on this is we didn't want to put this in people's mind to where they assume it's an expectation is it's going to get passed. A lot of stuff has to fall into place. We're cautiously optimistic because it has gotten farther in the Senate or the Congress than it ever has. President has indicated he will sign it. So all we have is the hurdle of the Senate, and we're going to see some really nice provisions. So again, if you're an individual, we're recommending if none of the business provisions apply, go ahead and file, get any refund on record, and if there's any change, they'll make that right. The IRS commissioner said that. Businesses with our clients, we're recommending hanging tight just a little bit more. Hopefully we'll have some clarity within the next 2 to 3 weeks. And then if we do, we will be certain to put out another video to explain. But Ryan, I feel like that covers it, man. Anything else you want to?
Yeah, no, I think that, that was great. That covered it.
Okay. Well, guys, appreciate you listening. If you have any questions, feel free to always reach out to us. In the meantime, hope everybody's doing well, and talk again soon.
Thanks, Bill.